It's been 176 days since I got my last video out, so welcome back, or rather, I'm welcome back to YouTube because it's been ages. I've just been really busy this end, and you'll probably notice that the walls are a different color because we painted. This is now my YouTube studio. This is the study. I'm calling it my YouTube studio. So hopefully you'll get back to doing some more videos, dividend investing, maybe some high risk stocks, anything stock market related. But I'm going to begin again with a portfolio review. My last video was a portfolio review and it was at £60,000. We're currently at 72.5 as we stand now. Market's still open. So I'll do a review of what I've been in and out of just roughly and give you an indication as to which way I'm wanting to take the portfolio, which I kind of alluded to in some of my previous videos, but I'm actually starting to implement it now, and hopefully it's yielding some pretty good results. Before we get into the portfolio, don't forget to like the video, subscribe to the channel, and pop a comment down below if you've got any questions, but otherwise we'll get straight in there and start looking through the portfolio. Right, we're here in the portfolio, so let's go through. It's literally just going to be a rough overview of the positions, what I've recently bought in and out of, more recent. So this will be very different, or quite different to the portfolio I had before. We're going to start at the top and we're going to work our way down in terms of amount. S&P 500 Vanguard ETF, you know I'm in this I dollar cost average, I buy every now and then, and we've got $11,188 worth of value in that. Apple, constantly buying as well, we all know this. Vanguard Total Stock Market portfolio, again, constantly buying. PIMCO Corporate and Income Opportunity Funds been in my portfolio for ages, and again I'm often buying into this, along with AG&C, along with Royalty Income, along with All True Group, along with Enterprise Product Partners, along with Global X Super Dividend REIT. Now the reason for this, I've mentioned this in previous videos, I'm taking the portfolio more income based, not growth. Growth would be lovely if I got that as well. Not kind of high risk spec stocks, and not even your lower dividend stocks, you know, your pretty consistent dividend kings that are paying 3%. I'm steering away from all of those as well, and going into income funds, monthly payers like your PIMCOs and your AG&C, and just getting that monthly income, which is starting to pay dividends. See what I did there? Pfizer, been in that for a while, going to hang on to that, good dividend stock, but there's no reason for me to be selling out of that, although the yield is not as big as like your PIMCOs and AG&C, but it's a decent company, I'm going to stay in that. Apple Hospitality REIT is actually a REIT that's reduced its dividend quite drastically more recently, in the process of selling out of positions that have reduced or have not had a great yield, sort of moving forward, and more growth stocks. So that is something I will be doing something with in a little while, not too long. I'll decide what to do with that very soon. Bank of America dividend payer, AT&T, we all know that's actually gone down quite a lot recently, so I've loaded up on a little bit of that, but great yield still. Royalty Income, the monthly income payer, or whatever they've labelled themselves as. We've got an income fund in the form of the Octagon Floating Rate and Alternative Income Trust. That's a very high dividend yielding income fund. Got into that more recently, currently down a tiny bit, but not an issue at all. That's just an income play, as is All True Group. Vodafone, UK phone provider, like your AT&T, great dividend yield. Has been down for a long time, but I'll just hold it. There's no reason for me to sell Vodafone. Iron Mountain, so we've got a few REITs. Iron Mountain is one of them. That's just going to sit there. I'm not going to do anything with that. I'll just keep getting the monthly, the quarterly payouts on that one. Enterprise Product Partners, great dividend payer. I think a monthly payer. Don't quote me on that. You can look that up on Seeking Alpha. Global Exit Super Dividend REIT ETF, really high dividend yield, a REIT ETF, and up 10% since I bought into it not all that long ago, and it's a monthly payer. Legal & General, British company, good dividend payer. Vanguard REIT ETF, again just another REIT ETF, but done by Vanguard, and I bought that right in the mess that was 2020, and 70% up, which is pretty good. It's good, just a slightly higher dividend yield than the likes of your S&P 500 ETF. Procter & Gamble, got no reason to sell out of that really. It's not the highest yield, but it's just consistent and will never steer you wrong, so I'm going to stay in that one. And so we're Midstream Partners, Similar, I guess, to your enterprise products partners, it's a very high yielding monthly payer. Pretty sure it's a monthly payer. Might need to double check that. Heirs Capital Corp, and I've got Heirs Commercial Real Estate Corporation, both very high yielding. Again, got into those more recently, so this should just start to bump up my monthly income, which I can then plow back in, and it can come back and it will grow that a little bit quicker in terms of the monthly income. The way I see it, it's all very well having a portfolio of Facebook and Apple and Netflix and things like that, although Apple pay a dividend, and having this £1 million portfolio, but if it's not consistently paying you on a monthly basis some sort of income, you know, when do you sell out of it? You just slice off the top and go for the 4% rule. I just prefer to go for an average portfolio yield of 5 or 6% consistently, and then I don't need to be doing the 4% rule and slicing off the top. The income's coming in anyway. No, just me? Okay. We've got Ventus dividend payer. I've got HSBC, been in that for ages, hasn't done very well, no need to sell it, still pays a yield, just sit on it, I don't need the money. Comerica Investment Corp, another investment company, high yield, bit more risky these high yield ones, but I'm willing to take the risk at the moment while I'm working, I've got the money to just risk it all, build up the capital, and then all I need is, 80-90% of the portfolio to be paying a dividend, and I should be absolutely fine moving forward. So Federal Royalty Investment Trust, that is I want to say a dividend king, this one, and it's a REIT, so good yield. I've been paying for many years. Oxford Lane Capital Corporation, again, just a nice fund, investment fund, really high yield, and I bought into this more recently, nearly 5% up on it already, which is nice. ExxonMobil, we all know. Tesla, Tesla. I sold out of Tesla. I had 5 shares in Tesla. I sold 2 of them when I got to 1,046 or 1,066, and then sold out another 2 when it got to 1,146, and said that I'd buy it back into it when it got down to maybe 859 if it plummeted back down. Got into the 9s, it's sitting around 1,100. Very happy when I sold Tesla. I've still got 1 share. I'll hold that probably forever, and I might buy back in if it comes back down again, but I reallocated the money back into the portfolio in high dividend yielding stocks, which made far more sense in the direction I'm taking the portfolio. Boeing. So Boeing and Carnival are 2 that I want to get out of at some point. But if I just quickly go into Carnival, it's been on a bit of a downward slide. So it was still up overall, but I'd just like to see if we can get back up to those sort of 28 levels and then probably get out of it then. I have no reason to sell it at the moment, so I'll just sit on Boeing. But Boeing, Carnival are ones that I will get out of at some point. They're both up still, 40% and 50%. From when I bought them, middle of 2020, but I'm just happy to sit on those until they go back up and we can cash out and get into some more high dividend yielding stocks. Store Capital Corporation, REIT, paying a dividend. Netflix, 1 share in Netflix. I feel like I need just some of these stocks in the portfolio. We're 122% up from when I bought it, along with Facebook, and I just want a couple of those in the portfolio. I'm not going to be loading up on them. It will just be sit and hold it almost forever and a day. Facebook, I did buy back in down here when it had that scandal recently and it plummeted, so I did buy another one of Facebook, but that's gone back up since, so that was a good buy. 125% up in Facebook. Vanguard International High Dividend Yielding REIT does what it says on the tin. Annaly Capital Management, an investment company with a high dividend yield. Leggett & Platt Industrials, we all kind of know them, down at the moment but a dividend payer. NEO, now videos I've done before was buying 10 EV stocks, about £100 in each, spent £1,000 in these EV stocks, so you didn't have to, you could live vicariously through me. They all did really well, then they all did really poor. I've sold out of 5 of them that have come back up and either broken even or gone up. Again, just reallocating my capital back in to dividend payers and not just having this rubbish sitting in my portfolio. NEO is one that was up, but I kind of just wanted to keep because it was probably my favourite one at the time, so I'm just going to keep that for the moment. EasyJet, dividend payer, we'll just keep that in there for the moment. Still pays a dividend. Luckin Coffee, don't want to talk about that if you've seen any of my old videos, although it's actually not as far down as EasyJet is. Doesn't pay a dividend, wasn't the best one. Market's still closing that. I think you've got to call them to close your position because it's probably still under investigation, I would have thought. Anyway, Walt Disney, no longer paying a dividend, but had a real slump recently. Yeah, I want to get it back up to that kind of 170, 180 mark before I start selling out out of that, but I will be selling out of Walt Disney to reallocate funds. And then we got a few of these EV companies. So Viatris isn't an EV company, that's the spin-off to Pfizer and pays a dividend, so keeping that. STM Group was a financial company that I just bought very badly, so ignore that. Nikola, Electromechanica, Candy, Hylian, Workhorse and Lordstown, all really far down, tiny amounts of money in each. Not going to be selling out of them until they're in profit. Don't need the money. I'd rather just wait until they're in profit and then sell out. There would be an argument to say sell out now, getting something that is going to grow up 40, 44, 50, 60, 70%, and then your quid's in. Don't know, I think it's just a mental thing. Don't like selling out something when it's down if I can help it, and I can help it. So let me know in the comments below if you think that's wrong and I'm doing that in the wrong way, but it is what it is. And lucky enough, there's no one way to invest. It's my portfolio, not yours. So what are you going to do? So that's an overview of the portfolio there. I'm in 49 positions. I've sold out quite a lot. I've bought a few other funds and whatnot, and I'm going to go through how many dividends I received in October in one of the next videos, because it was a really pleasing amount considering I was averaging about £120 a month, 130, 140, bumped it right up there. So I'm going to go through that in the next video, which will probably be next week, but otherwise that's it for the portfolio today. That's it for in there, guys. I'm going to keep the outro super quick because that would have been a long video. Make sure you like the video if you enjoyed the content, if you enjoyed looking through the portfolio and getting an idea of which way I'm taking it, or just enjoyed having a nosy. Subscribe to the channel for more. I said I'll try and get these videos out at least once a month as a portfolio review, if not more often during the week as well, with all things stock market related, as much as I can possibly get out there. And pop a comment below if you've got any specific questions. But otherwise, I'll leave it there and I'll catch you guys in the next video. See you later.